U.S. Treasuries took down.
Listen up, Rebels. Rebel Leader here, and today we're going to talk about the crazy volatility we are seeing this past week. Now, we started the week, 4th of July, shortened week, and there was bad news right out of the gate. And by bad news, I mean that we were seeing some big major growth stocks kind of release unsurprising numbers or not exciting numbers for the growth prospects going forward. I'm talking about big Chinese companies like Didi and others, but mostly the government came out that trying to keep inflation low, and the treasury bond yields rates, interest rates are going to be kept like 1.12% or 1.25%. It's very, very low for a 10-year yield, but they were saying that this essentially was an indicator that growth was gonna stop. And there are all these different factors that a lot of analysts try to really look into and try to predict the future of the stock market. But I would say there's really no need, especially for first-time investors, to even worry about that. And at this time, it's mostly just to be more conservative with your money. They're trying to kind of warn you of the risks in these things, but it's really nothing to be worried about, because over time, again, if you think about what a stock is, all these big businesses, they're only going to make more money over time. They're going to keep growing their business, keep putting out new products, keep selling to new customers, and that is why you shouldn't be ever afraid to enter into a company stock that you really believe in, that you really like. And entering into those companies that you really believe in will also make sure that you don't sell off during a market dip like this past week. And depending on what stocks you own, you could have seen a 5% dip this past week, and if you didn't even look at it at all, you probably already recovered. It's because today, on Friday, finally, people's losses were all recovered mostly. The stock market's back to an all-time record high, and it's kind of, this volatility goes up, it goes down. But so that leads to the question of trying to time this market. And sure, you could have sold out last week Friday at all the all-time highs. It's really hard because you don't really know the stock. Nobody really knows the stock's going to go up or down the next day. But generally, over time, it will go up. That's for sure. But trying to time it explicitly as the top or a bottom, just even this past week, is a good example. It's almost impossible. And the reason you don't really want to worry about yourself with that is one, too stressful. Two, it's almost impossible to do. So to even worry about it is a waste of time. And three is that we're not chasing a 2 to 5% gain in the stock market. We're chasing 2x, 3x of our money, and that just takes time and really honing in on the companies, doing research that you want to put your money into, and then just holding it for the next year or 2 years, right? Those should be your time horizons. And trying to worry about, I lost 5% this past week, I should have pulled out. And, sometimes maybe the worst thing you can do, again, is pulling out in that market dip. Because if you pulled out 2 days ago, when the stock was down 5%, by Friday, it already recovered, over the course of like 2 or 3 days. And that's kind of just the worst thing you can do, is to keep meticulously looking at every single second, every single stock you own. Because again, that's not the game plan. That's not what we're here to do. We're not here to worry about these small volatile changes in our stock price. 5%, 2% here, there. No, we don't even want the 50%. So, we want the 100% of our money. We want 200%. We want 2 to 3x, right? And that's kind of the mindset that you have to kind of be in. But if you don't like that volatility, then again, buy the companies, the big techs, Apple and Amazon, that is not going to be volatile, that will not fall. It barely even fell, maybe not even 1%, maybe less than 1%. Probably even went up, these companies, over this past week. These are the slow and steady gainers. You're not going to get out of these companies a quick turnaround. You can pretty much guarantee like a 2x of your money over the next 3 to 5 years in stocks like that. Because again, their business model keeps growing, but you don't have to worry about the stock price fluctuating in those companies. So this week was big on a volatility lesson, and maybe hopefully you kind of can reflect on yourself of how you handle the situation, because that's what's most important. Being able to be self-aware and know how much risk you can take, your risk tolerance levels, and also it really makes you question what companies you actually believe in. If you were willing to sell that company just because it went down, maybe you didn't really believe in that company as strong as you thought. When bad news starts coming around, some market sentiment comes around, if you were willing to ditch that company in a heartbeat, then maybe you have to look for a new company to invest in. That's kind of what it's all about, right? Rebel Leader, over and out.